Good evening, friends. Today is a Wednesday. Normally, I don't come in front of you on Wednesday. Normally, QnA is always on Tuesday. The reason I am here because yesterday Mohit was in front of you with the stock of the month. The December month till now turning out to be good for the investors. This is despite Reserve Bank of India lowering the GDP and hiking the inflation projections. And yet, market has reasonably hold on to the, in fact, not only hold on, it has done showing some amount of a resilience. One key thing that really, shows a lot of strength in the Indian market is that negative news are coming. Whether it relates to the geopolitical situation, is it relating to the some business Indian conglomerate coming under some amount of a regulatory vigilance and so on and so forth. Market is able to absorb negative news in a much better manner. And that's what the data is showing, actually. So I'm going to discuss some, what's happening on the economy, not only in India, but also globally. And then we'll open the floor for question and answer. But before I do that, a disclaimer. This webinar is just to enhance your understanding about the equity market. Investment in securities market are subject to market risk and past performance is no indicator of future returns. Please consult your financial advisor before buying or selling any stock. Now, if you look at, I think somewhere today, Ms. Nirmala Sitharaman also talked about inflation likely to remain a little sticky, and the last leg of inflation, and everyone today waits for the US inflation data to come. I don't think before I came in front of this camera, I checked, I don't think it has come out. But yes, last 2 days US market has been a little soft purely because of what would happen to the inflation. While the general consensus seems to be that inflation will inch up even in the US, but how much it goes up, I think that's where the challenge is. But somewhere, one thing is clearly, if you look at the commentary from other central banks across the world or data from across the world, inflation is becoming more and more sticky, not only in the advanced economy, but also in the emerging markets. So this despite the crude oil, which could be one of the reason behind the inflation to go up, has remained very, very benign. We all know that OPEC plus country deferred their production hike because of demand is not so great. And Saudi basically reduced the premium it used to charge on the crude it supplies, lowering the prices. One big element of this inflation has been the food inflation, and in India, it's likely to remain at the elevated level in the Q3 of FY 2025 and will start softening somewhere by Q4 of FY 25. Food and Agriculture Organization, that is FAO, that's a worldwide organization, food price index, it increased to 127.5 points in November, up 0.5% from October. And it reached its highest value since April 2024. In the last 18 months, it touched its highest value. So what it was going down, it started nudging up. And what is driving the food inflation across the world has been the price of dairy products and the vegetable oil. If you are consuming edible oil and if you know your budget, if you don't know, ask your wife, ask your sister, ask your mother, they definitely must be paying higher price for the edible oil even in India. Good thing is that for food inflation in country like India, the Kharif output is likely to near about 5.7%, and even the rice production should be up by near about 5.9%. What is good is that Rabi crop till 29 November 2024 has been higher as compared to what it was there last year, same time, 4.1%. So I think that gives some amount of a comfort level. And if you look at within the Rabi crop, the wheat and pulses sowing has been higher by almost 6.6 and 3.6% respectively. So food inflation has a higher probability of softening purely because of the Kharif output is good, the Rabi output is likely to remain good, and unlikely we are going to see El Nino impact in the next season also. So I think these are all positives for the market. But despite that, inflation is remaining a little sticky. If you remember a couple of months back, I said that coffee बहुत महंगी होने वाली है आपकी. And that's what exactly has happened. The coffee prices have gone up. So I think there are inflationary, and some of these FMCG companies have also increased prices of their FMCG products. And of course, I'm going to discuss more about that in my tomorrow's PMS webinar with our PMS customers. The growth outlook, because of Kharif, has been better. The ruler is seeing a lot of strong strength in the demand, but urban demand continues to remain a little slow and is showing moderating. I think somewhere our consumption basket, especially on the urban side, seems to be challenging. Today I got one message from one of the fashion retailer, that they've started the sale. And if you remember, I told you if sale starts just before the Christmas, it's fine. But if it starts somewhere in the first or second week of December, it's not a happy sign. Other day, last Sunday actually, I went for a movie, Pushpa 2. And I went to Jio, which is in Bandra Kurla complex. There was a season and the mid-season sale in one of the premium outlet. So, and up to 30% kind of stuff. So I think there has been some softness in the demand. And FADA, when it came out with the numbers for the month of November, even though the inventories come down by near about 10 days, still remain at the high. But they made one pertinent observation in that press release. And what was that pertinent observation was made? The demand which was supposed to be expected from the marriage season is not as robust as it was expected. Now that's on the negative side. But if you look at some of the data, other data like e-way bills is increased by 17% in October. If you look at the toll collection, it is increased by 12% in the month of November. And if you look at the petrol consumption, petrol and product consumption, after 2 consecutive months of contraction, it has turned positive in the month of October. So the data points are a little mixed in the sense there is nothing called sure shot. There are some positive data, there are some negative data that are coming out in the market. The credit growth has been 12.4%, deposit growth has been 11.6% as of November. But of late, there has been better growth in deposits as compared to the advances. And due to that, credit deposit ratio seems to be improving. Air passenger traffic increased by 14% in November, which is again shows that more people are traveling, people are spending, but there are pockets of softness, there are pockets of strength. And I think somewhere that forces RBI to revise its GDP growth to 6.6% from the previous estimate of 7.2. If you remember, in the month of October, RBI maintained 7.2% GDP for FY 2025, and in 2 months, it brought it down by 60 bips point because the data are mixed in terms of some sign of strong strength, some sign of softness. CPI has been revised upwards to 4.8% for FY 2025. Now, what is the RBI? 4% is a more plus and minus 2. I think it's going still above the RBI comfort level. We have stated again that we don't expect RBI to cut rate. If you ask me, it is needed actually. Why? Because the economy needs some amount of a boost. But I knew that what was reading in the market is that it's not going to do. So the first rate cut will happen only after post-budget. And that's why I think market will closely watch what kind of package being announced in the budget to bring back the growth in the economy. And something more would also expected from the central bank, because growth is a need of an hour. Purely because the global outlook, the global market is little right now little uncertain, and that just makes the little things. Normally, if the economy is not doing well, you will see high portion of NPA. When the economy is doing well, you don't see high amount of NPA. And in fact, if you look at the NPA, gross non-performing assets, it reduced to 2.54%, the lowest since March 2011. So we are basically talking about 13 years low in terms of gross NPA, which is a very happy sign to be. But having said that, there are pockets where the NPAs are going up, and that's unsecured loans. And that's one of the reasons we have seen some of the NBFCs companies coming under pressure purely because they seems to have a higher exposure to the unsecured loans, and probability is very high that can go and result into an NPA. One people ask me whenever I travel to other parts of the country that India's debt level. And if you look at the external debt, which is more important to remember, that has declined marginally to 18.8% at the end of June 2024 as compared to 18.9% of March 2024. So does India run a risk of a default kind of stuff? Very, very nominal. That 18.8 is not something that we should be really worried about. FADA, which we discuss about, and there is one hope that basically everyone now have, and if you go back to the commentary from some of the companies also, December doesn't look like a very promising in terms of quarterly numbers. But everyone is really hopeful the first quarter of year 2025, that is Jan to March, will show a sign of revival. One reason could be the inflation would have softened, number one, would have hit the peak. Number two, the government capex, which has been a little slow in the first 6 months or 7 months of FY 2025, will see some revival. And number three, hope that the world economy remain quite stable, and that would really help Indian economy to do well. And of course, we will all wait very closely what kind of nominal GDP growth the government is expecting for FY 2026. The first initial estimate which I was reading yesterday gives an impression that government might go for nominal GDP of less than 10%. In this financial year, the nominal GDP is expected to be 10.5%. The next financial year, the probability is very high that we might target less than 10%, purely because the inflation could be little lower than what it is in the FY 2025. There is a lot of confusion about what's happening with the auto sales. And I thought, don't look at that numbers on a month-to-month basis. Because why? Because of Diwali. Last year Diwali is a different month. This year Diwali is a different month. And due to that, it does create some amount of a comparison not possible. So what I did, I combined the vehicle sales for the month of October and November. For this year's versus last year. Idea is to get an idea, because then, you are combining 2 months of what has been spillover get captured. And when you look at the two-wheeler, and I think that's extremely happy to know it is up by 25% as compared to last year of 2 months. Three-wheelers 13%, not bad. Passenger vehicles still 13%. This is, of course, a lot of the growth that we see in the passenger vehicles driven by the discounts. You go to any store today and ask for the discount, you will get the discount. Tractors are up by 17%. The only challenge, I believe, is a commercial vehicle, only up by 4%. Somewhere, commercial vehicle also, so maybe once this capex start happening, mining happening start, government start spending more on the infra, I think this number can increase. But on an overall basis, when you compare from October, November last year to October, November this year, data seems to be better for the automobile. Having said that, just a caveat. I think marriage season, as Farah said, is not as robust as what was expected. Whatever I could gather from the market in the first 10, 11 days of December, sales is little slow in the automobile sales. And hence the number for December may not be so great. That's what the initial estimates are. Let's move to the world. The world, if you look at the global PMI composite, it has increased to 52.4 versus 52.3 of October. So that's a growth that is there. OECD as well as IMF both have expected that 2024 world is going to grow at 3.2%. So I think that's a very happy scenario. No one has basically downgraded the growth in the world. Of course, within the world growth, there are pockets. Country like US is doing extremely well, but country like Germany are struggling. Country like China would be happy or lucky if they grow even at the 5%. In a country like India, we have been forced to revise our GDP downward. So there are, again, there's a diversion. And the diversion is more among central banks. So what you see, the country in last 2 months, the central banks in last 2 months were cut the rate are countries like USA, UK, Euro, Canada, New Zealand, Sweden, Iceland, Czech Republic, South Korea, China, South Africa, Mexico, Philippines, Sri Lanka, Thailand, Peru, and Chile. So it's a mix of emerging and the developed economy. So it's, that's what has happened. So while some countries, some central banks in the world have cut the rate cut, and then there are more countries which have did the rate cut, but 2 countries basically hiked in last 2 months. That's Russia and the Brazil. And at the same time, almost 10, 11 countries have maintained the status quo, including India's RBI. Australia, Norway, Japan, Israel, Hungary, Indonesia, Malaysia, Poland, Romania, and Turkey. So we are seeing this divergence happening among the central banks. And I think we need to really now need to understand, and because what was happening post-COVID, each and every central bank was moving in a unison, Everyone was cutting rate of interest to revive the growth in the economy because the economy had slowed down because of COVID. But now we are seeing the divergence. And how the divergence play out in the world economy would be closely watched by the economist fund managers across the world. As I said, the December turning out to be good. Sensex is up by 2.16, Nifty is up by 2.12 in the December. But the best has been Germany, which has been struggling to grow. The economy is struggling to grow, but DAX is up by 3.58. Italy is 3.38. So there has been some amount of better numbers have been coming from the Euro area. Spain, you look at it. France, you look at it. China did 3.19. That's a very good thing that China did in this one. And if you look at the Nasdaq and S&P 500, till now underperforming the Indian market in December. And of course, England and Russia in the negative zone. Last 1 week, small cap up by 2%, mid cap 1%. And I must tell you, at every decline, there is a buyer coming in small cap. At every decline, there are buyers coming in mid cap. So despite frothy valuations, somehow a lot of stickiness has been shown by the small cap and mid cap. And in fact, even I'm surprised with that stickiness. But somewhere you have to accept the reality of life. When data has been thrown to you time and again, then you will be forced to admit with that data. Nifty and Sensex little subdued as compared to what happened to the small and mid cap, and FMCG struggling down by 0.88%. We all know what GCPL came out with the guidance for the December. Pharma was down by nearly 0.5%. PSU Bank did see some amount of a profit booking, and it's little negative. While the Bank Nifty is little positive, but PSU Bank is negative. YTD small cap is up by 35%. I think it's a commendable job that small cap did, followed by mid cap. Somewhere in the June 2024, when I was making presentation, the mid cap was much better as compared to small cap. And look at this, the revival has happened in the small cap. It's up by 35% YTD. One of the best performing years for the small cap. Mid cap is up by 31%, and Nifty and Sensex are almost up by 13%. The one index which is still in the red despite the overall teji in the market, if FMCG, for the very simple reason, the demand is little challenge, and that's where investors are reluctant to go into this sector. The positive news from the market point of view, FPIs have turned buyers. They bought 26,000 crore in the first 11 days of December. Okay, but they were net sellers in October and November. They seems to be. My sense is that whatever heavy selling that was supposed to be taken by FI is over. We should expect more inflows coming in from the FPI. And we all know what happened yesterday from the mutual fund data. The SIP inflow continue to remain in excess of 25,000 crore. In other words, if FPI inflow comes in, domestic investors flow through mutual fund keep positive, I think this market can sustain at the higher valuation. With this, let's open the floor for question answer. Lalit Saiskin, good afternoon, sir. Please guide about the NSE pre-listing sales. Should we buy? And is it worth if I hold more than 5 years? Then what your opinion about how much return we can expect? So Lalitji, I normally don't talk about the stock specific. But since NSE is not a listed space, let me make an attempt. I can tell you NSE's listing is not going to happen very soon. Okay, so it's going to take some time, and I believe some investors have taken to the NSE to the High Court because there is a delay in terms of listing. So if you are willing to wait for at least for 12 months कि listing नहीं होने वाला है, because again remember there will be a lock-in for your stocks that you are holding. Okay, so imagine that if you are willing to hold on for, we are okay, even if the NSE listing does not happen in the next 12 months, you can buy. I think NSE definitely has a bright future because what I believe, the number of retail investors in this country are going to keep going up. We have near about 10.5 crore unique investors in this country out of population of 140 crore. Number one. Number two, so that means these numbers will keep increasing. As and when the number of investors keep increasing, the volume will keep increasing. At the same time, those are existing investors. They are also buying more and buying and selling more on the market. So that will further add to the volume, and it's all a question of volume game. So it should do well. My sense is that because of technology, I really wonder what is the role the brokers are playing, except the research. But I don't want a research as a platform, and I want to directly buy and sell. Then what is the role the brokers are playing? It's anyway a platform. And if SEBI is going to come out with a T+0, and it is announced that T+0 for 500 companies, top 500 companies by 31st January, I think eventually, if you ask me, the role of broker is basically become NSE can directly service to the end customers, to the client, and that could be another game changing for the exchange businesses. So logically, if it is available, willing to hold for 5 years with clarity of mind that this listing will not going to happen in next 12 months, maybe you should expect. Now, how much return you should expect? Sorry, sir, Lalit Bhai, I will not be able to answer that question. But you should expect returns in line with what the markets are from NSE. BSE is our Mojo stock and has given fantastic return after becoming a Mojo stock. So now you can draw some correlation from that, take some cue from there, and you can make your own sensible guess there. Which sector is likely to lead the market rally further and why? Rameshji, I think the market in 2024, we saw realty did extremely well because the risk-on strategy was there. So whether we'll see a risk-on strategy in 2025, we need to wait and watch. I think there was one article I was reading where it says that, some of the players like NVIDIA are now struggling to report gain in the recent past. So I'm going to make an equity outlook presentation 2025. I will try to cover which sectors which looks promising for 2025, and also explain why we believe these sectors are looking promising. So Ramesh ji, my request, just hold on your horses at least for next 20 days, and I'll be in front of you to talk about sectors to look out or watch out for in 2025. Avnish sir is saying, is it understood that PMS and model are different products and with different risk profile? How is it possible that a stock can be a buy in model portfolio and sell in PMS portfolio? Of course, yes, sir. Avnish sir, it can be. So we try to understand there are a couple of major the changes which are the DNA of PMS and model portfolio is different in many aspects. The IP is the biggest difference between PMS and model portfolio. Number two, the construct. In model portfolio, based on your risk appetite, conservative, moderate, or aggressive, we have a market cap allocation, upside restriction, sector allocation, upside restriction. There is no such thing in PMS. In Sol, I can go up to 100% small cap. None of the model portfolio has that provision. In one sector, I can go up to 100% Sol. That provision is not there in model portfolio. In model portfolio, number of stocks are predefined, maximum so such, okay, based on the risk appetite. In PMS, it's quite flexible. In power, yes, we will not go more than 20% in a small cap. That's the only difference. So between Sol and power. So construct is different in terms of market cap, in terms of sector exposure, in terms of number of stocks, and the IP. So these are different. And yes, what is buy in model portfolio could be sell in PMS portfolio very much. How much percentage is enough to book profit in this volatile market? So Samir sir, don't have any fixed percentage. Why? Because in some companies, even 10% profit is good, and some companies, even 100% and 150%, 200% profit is also not good enough. So, simple metrics which I have said time and again, reason to exit should be those reasons to exit where the story for which you bought has changed. If the story remains the same, why do you need to book profit? Enjoy the upside ride and you will make good money on that. There's a very famous statement from Peter Lynch. Know what you own and know why you own. आपके पोर्टफोलियो में क्या है वो समझो, तो वो क्यों है वो समझो. So as long as you know why you own that company, you will know whether you should book profit or not. I would not book profit even if I'm making 400% return in a company. If the story remains quite rock solid, and may get out of a company even with 1 or 2%, maybe at the loss also, if the story changes for which I got in, story no longer remain valid, accept the fact and move on in life. Rohinton sir is saying, is there any one single or more company in India with NVIDIA-like potential? Rohinton sir, basically what we are trying to say, is there a possibility of multi-bagger in Indian market? Of course, there will always be a multi-bagger in any market. Remember that. The key is to identify that company, multi-bagger, and only in hindsight we know that this company turned out to be a multi-bagger. So, and I know you have been very reasonable that one single or more company. I met many investors. He said the whole portfolio should be consist of multi-bagger. On one hand, Warren Buffett said, if I'll consider myself a lucky if I can find one multi-bagger in 6 years. But here we want multi-bagger maybe every day, every week, every month, and every year. That's practically not possible. But of course, there will be always be a one or two. Why one or two? There will be many companies which could be a multi-bagger, provided you have a knack of finding that company out. And that it's not easy. I must tell you that. Had it been so easy, everyone would have been able to find out multi-bagger. You would have made money. I think you need great amount of understanding the business dynamics, the management thought process, and so on and so forth. There are yes, but no easy answer to that. Which company that would be very difficult to say. I can also tell you one more thing. Sorry, when you buy 5 companies or 10 companies in a portfolio, probability of only one company will turn out to be a multi-bagger. Only one company. Okay, but even the best of the best fund manager will not know that this company can turn out to be a multi-bagger. Only once it becomes a multi-bagger, you realize, oh, it was it turned out to be a multi-bagger. Yeah, sorry. Savari sir saying, do you think mid and small cap will do well in calendar year 2020 and why? Sir, very fair question from your side. Can I request you, please hold on. Anyway, I'm going to do Equity Outlook 2025, but definitely I'm going to cover my mid and small cap presentation. If you remember in 2024 also, I did mention about my view on mid and small cap. And what was my view was that the mid and small cap should do better than the large cap. But having said that, I just mentioned that still they will give single digit returns, both small and mid cap. The reality is that they overshot my estimation. They are almost up by 30%, both mid and small cap. So they did better. So I'll definitely going to cover with reasoning what could happen to the mid and small cap. Xavier Fernandez, hope this message finds you very in good health. So sir, I have some questions on PMS as I'm thinking of joining. How different is Mojo Pairs than other PMS out there? If I stay in for 15-20, will I be able to generate super alpha returns? So sir, you have asked in one question, 2 questions. So let me first answer the first part of your question. How different Mojo Pairs than other PMS out there? The beauty with us, Xavier sir, is that we have an ability to analyze all listed companies in a real time. No other PMS house has that ability. Why? Because we use data science in a great parallel. And hence that's number one. Number two, we don't have any restriction in terms of what percentage of small, mid or large cap we can have in our portfolio. No restriction on a sector, while other PMS houses do have as a part of this one. So that's a big difference. Research. And third thing is no human bias. I think that's another key thing. While other fund manager can run into a human bias, we will not have it because it's a data science. If I stay invested for 15-20 years, will I be able to generate super alpha returns? We think so, sir. Otherwise, we have no reasons to be in this business, very frankly. So we strongly believe, yes, we will be able to do that. Provided you are there for the long term. There will always be pockets where there could be underperformance. So we want that kind of a maturity. In fact, I met someone other day when I was traveling. What an investor that person is. Started PMS, not bothered to even look once how the PMS is doing. He said, I've given the money for minimum 10 years. How does it matter what happens to the journey for 3 months and 6 months? He said, and he gave a very beautiful example to me. He said, if you're traveling from Bombay to Delhi by train, do you keep checking out kaun-sa station aaya, kaun-sa station aaya? You know that it's going to take near about 24 hours from Bombay to Delhi. Then why do you have to bother about destination aaya ki nahi? So I think that's where, and I'm very happy, sir, 15-20 years, hats off to you, sir. You are showing that kind of a maturity and that's kind of a long term. Because the power of compounding works out beautifully over a longer period of time. Now, second part of it, are you and other Mojo leaders fully invested in PMS too? Which one? Soul and power is preferable to you? So I must tell you that the MarketsMojo own money is invested in our PMS. Mohit's family has invested in our PMS. Joyson family also invested in the PMS. So I think that's answered. And in terms of soul and power, it's a function of your risk appetite. Xavier sir, the soul, because it does not have any restriction in the small cap, it is more higher returns, higher risk, higher returns. Power has a limit. Even if our IP suggests that small cap is going to do well, we will invest only up to 20% in small cap. So that's the difference there. So depending upon your risk appetite, you can pick and choose which one suits you. Since it's a 10-15 years, if you ask me very frankly, I would definitely go for soul as compared to power, because eventually in India, on a 3-year rolling returns, small cap in the most occasion has done better as compared to the mid or the large cap. So that's what my advice would be. Of course, it's a function of how much risk appetite you have to weather the downside risk also. What are the parameters for profit booking? Sir, we have inbuilt our parameters within our PMS to do profit booking, and that's very robust, dynamic based on the market concern. After deploying all funds, if my portfolio is down by 15 25, will it be good idea to add more funds in a staggered manner to get better returns by the portfolio? Answer is definitely yes. Human brain is, they want to buy at high, sell at low. If you ask me, once you understand the power for IP, in fact, when the portfolio is not doing well, it's all the more reason you should add more money. Okay, and we did one analysis. In the sense it was done by MOSL, and we just consumed that analysis. The best fund in a block of 3 years is normally in the last quartile in the next 3 years. In other words, and normally what would happen, human psychology is what? Let me put the money in the best performing schemes. Am I right? Normally that's a human tendency. In other words, you are getting into the top of that peak of that the PMS performance, and then it may be one of the not so great. But if you invest in one of the worst performing index, not the mutual fund scheme, sorry, which is 3 years, and not, of course, every year there could be one block of 3 years. If you invest in the worst performing mutual fund scheme, probability is very high. I'm saying probability that could be the top quartile 3 years down the line. So I think it's a great strategy. If you ask me, it's a great strategy to put more funds when your portfolio goes down. Why? Because the strategy is so robust. As and when it outperforms, even the additional amount that you put will also outperform significantly and give you huge alpha over a 15 to 20 years. So thanks a lot, sir, for asking this question. We'll be more than happy to welcome you. In case if you need more clarify something, please reach out to us, and our team would be more than happy to assist you. Amil, just forward me this message. I'll ask someone to get in touch with you, sir. Shyam Sundar, sir. I think Shyam Sundarji is always normally asked questions, and I think Amir has been kind enough to pick up Shyam Sundarji question every time. I understand that you do not consider future outlook and estimate to categorize stock as a mojo stock. If you have said and understood the minimum or necessary criteria, you have said and I understood minimum or necessary criteria for a categorize a stock as a mojo stock. Will you be able to say a sufficiency criteria? Sir, I'm not very sure what question is yours actually. So I understand that we don't take into consideration future outlook and estimates. But what is your question, sir? I'm not able to understand. If you can rephrase your question, Shyam Sundarji, I'll be more than happy to answer that. सर का सवाल आ जाए तो वापस मुझे भिजवा देना प्लीज. Tushar Kondra, sir, it was pleasure to meet you in person during PMS offsite tour. Thanks, sir. Pleasure was all mine, sir. Do you foresee gold CGR to increase from 11% to much higher teens to say 15% given following reason? Debt-funded growth, inflation will be increasingly stagflationary, tariff wars will lead to currency depreciation, socializing, getting consensus, higher indirect taxes will affect consumption, salary is not coming with the inflation on basic food items and related assets. So, Tushar, sir, we need to understand that gold is a global commodity. India is a price taker. India is not a price maker. Try to understand that. one of the largest consuming nation of gold in the world is China. And if China slows down, demand for gold can come down. So you are right, gold has given 11%. It's a commodity cycle. My sense is that some years it can give you 15% return. Some years it can give you negative returns also. But over a longer period of time, I think we should expect 10 to 11% appreciation only. I don't think we should expect more because remember, the gold does not carry any income on that. It's just the capital appreciation you get. And what are the parameters that you talked about? I think, sir, some are applicable to domestic market, and in India, gold we import. So because what's happening in India is not going to determine what the global price of gold could be. I think 10-11% for next 10 years is a reasonable assumption from gold. श्याम सिद्धि जी का सवाल आया क्या? अच्छा, ओके, ठीक है. How I allocate, Sagar sir is saying, how I allocate my new investment model portfolios. I have added 3 lakhs in existing model portfolio of 7 lakhs portfolio. IRR dropped from 70 to 48. If I keep adding every year the new amount of existing model portfolio, my IRR will drop. I get incentive every year when I'm investing at the moment. Also advise, do I invest my incentive in single lump sum or tranches for better IRR in portfolio? So Sagar sir, very obviously, when you invest additional amount, the IRR will drop because it's the new amount will not generate the same amount of return. Am I right? So don't get too much perplexed by the IRR when you invest more amount, because the IRR works beautifully over one year and above. So my suggestion would be, keep adding amount as and when you get incentive, keep adding amount in the model portfolio. Don't worry too much about the sudden drop in the IRR because of additional investment. Eventually, because you should, I again repeat for everyone, never look at portfolio returns from 1 year, 2 years. It should be minimum 3 years period. Even the example I gave you of mutual fund also, I said 3 years, block of 3 years, the best performing mutual fund. Unfortunately, in India, somewhere the education level has been not so great, and hence people look at even 3 months, 6 months also performance. Even 1 year and 2 years. It makes no sense actually. You should look at it in 3 years. So, sir, please add in the existing portfolio only. Don't worry about error will remain very healthy once that money works for you over a period of 3 years. Manish, my question is, Indian markets corrected from 26,000, 20,000 previous months, while American market is still on high. Don't you think when American market correct, then again Indian market correct again? Manish sir, not necessarily. The reason behind correction not should be, if the reason is global slowdown, yes, Indian market can mimic the US market. But the reasons are more local for it has to fall. I don't think then we should be too much worried about. And there are periods where the US market went down, Indian market did not actually. And if you require a question for Kadan, I'll present you some data where we have seen, even for month, even for quarter, and even for years, we have seen divergence between US and the Indian market. So not necessarily, sir, that if US fall, we will also fall. Anjali said, do you admit that your prediction for performance in 2024 median small caps have proved wrong? Ma'am, I have not made the prediction for 2024. To 2025. I think you are referring to 2024. So, in terms of direction, it was right. In terms of quantum of direction, it's proved completely wrong. Because I remember what I said in January 2024, Anjali ji, that I expect medium small cap to perform better than large cap. And there was one slide also I presented when large cap did not do well, medium small cap did well. So that slide, if you remember, go back to that prediction. It must be available on YouTube, that webinar. But I did mention that medium small cap will give returns in single digit. which is not the case. In fact, it has given much higher returns in excess of 30%. So direction was right, but quantum of direction was wrong. So if you believe that quantum direction was wrong, absolutely, I was 100% wrong in terms of predicting the quantum of growth that small and mid cap will make in 2024. Suresh said, I have a granulous pharma shares in quantity. What suggest? Shall I hold or quit? I am in profits, but US FDA problem persists, hence asking. So my request would be, I don't give stock specific reply. My request would be, sir, please look at the score available on the MarketsMojo site to take a call. That's the best advice I can give you, sir. Venu sir say, what are the charges for PMS? Sir, what I'll do, I'll ask one of my team members to help you to reach out. We have fixed plus performance, what we call fees. I don't want to waste other people's time and energy here. So what I'll do, मुझे एक forward कर देना. We'll come back to you. So someone will reach out to you tomorrow, sir, and will explain you what are the charges we have. Ravi Chandan said, hello sir, what is your view on EV sector, both vehicles and power generation and distribution? Sorry, I'm getting that. What is your view on EV sector, both vehicles and power generation and distribution? EV for power generation and distribution, you mean to say that someone setting up a facility only to charge EV, that's what we are trying to say, the EV charging station, that's what you mean to say? I assume that's what you are basically trying to say. So my sense is that EV is the future, and eventually it will, India will move towards EV. Not only India, across the world, I think people will move. There has been a little setback right now in terms of the EV because, there are different experiences, different this one. Eventually, technology will advance. There are two schools of thoughts right now in India. One school of thoughts that we should move towards EV. Another thought is that we should move towards hybrid. Eventually, if you ask me 10 years down the line, I think EV will emerge as the winner. Purely because your cost of running vehicle would be very, very low. There will be a premium because of the pollution. The people will appreciate that they also have a responsibility to play a very active role in this global warming. The more we use combustion engine, more we are adding to the pollution in the system. So my sense is that EV is the future, and we all know what happened in COP. I think EV has the future. But having said that, do not expect the leaders of today will be the leader of EV tomorrow. And I'll give you, I had gone and attended Ola when it came out with an IPO, the analyst meet, and I asked Bhavish, there are historical evidence that's available. The leaders in the new industries are no longer a leader. And at that point he sounded very confident. But I was reading one article yesterday that Chetak has overtaken the Ola in terms of electrical vehicle. And I think someone else will eventually will take over in terms of leadership. Because EV is all about the software. EV is not all about hardware. Am I right? So I think those who make fantastic software will be the winner. So, and I believe EV has a great future. India will basically, because that reduces your dependency on the fossil fuel which India imports almost 80-85%, and it can save a lot of forex for this country. In terms of the charging station for EV, if EV is going to do well, I think the charging station, the complete ecosystem will also do well. There are no doubt about it, And today many housing complexes are not, does not have enough EV charging stations. And I can tell you with confidence, you will see builders as one of the selling point of their project. He said, we have charging stations, and eventually each and every parking slot will have a charging station. So I think it's a huge opportunity there even for this actually. So complete ecosystem will evolve with the EV. Yes, there has been a little lull at this point of time as we speak, but I think the demand will come back very strongly. Sunita Mahajan ji, nowadays there are some brokers who have giving lucrative offers in buying a chunk of shares in block deal from promoters after trading hours at 8 to 10% discount, which can be sold next day immediately from demat account to be maintained by them only. Please advise, in my opinion, is there a new form of fraud? Sunita ji, you are absolutely right. Please don't fall to the system. And I don't think they are brokers. You've used the brokers. I don't think they are brokers. They may be posing themselves as non-brokers, but they actually not. They are actually some dummy or some scamsters who's trying to attract you with the name that they've given. And many brokers have given a notice and given release an advertisement in the newspaper also that we are not them actually. Why would the promoters will sell at 8 to 10% discount? You tell me, what is the logic? So first, okay, first thing that should ring in everyone's mind, why would promoters will sell 8 to 10% discount? और उसको बेचना है तो मार्केट में बेच देगा. And do you think SEBI will take it offline for the brokers? Because they are supposed to report to the SEBI when you dilute the stake, promoters. उनको पूछना भाई कौन से ब्रोकर्स ने बेचा जो तुमने बेचा है. Ask them the question. See, this kind of scammers can be basically realize, make them realize. If you ask them, okay, which brokers, which promoters have sold 8 to 10%, वो तुमको नाम देगा. You go to BSE India website, you go to NSE India website. उन्होंने have they disclosed this to the exchange? उसने नहीं किया, वो आपको बेवकूफ बना रहा है. And why would they? You need to have the shares to be maintained by them only demat account. उसको बोलना भाई मेरे डीमेट अकाउंट में ट्रांसफर करना. व्हाई कांट यू डू दैट? बिकॉज वो डीमेट अकाउंट ही नहीं होगा उसका. इट विल शो यू, सी दे आर वेरी स्मार्ट, दे विल मेक एप्लीकेशन सो स्मार्ट इट लुक्स लाइक ए रियल. वो कुछ नहीं रियल, वो बेवकूफ बनाने का धंधा है. इन अवर गुजराती देयर इज ए वेरी फेमस सेइंग कि जहाँ लोभिया हो ત્યાં ધૂતારો ભૂખે ના મરે. લોભિયા मतलब those who are greedy and ધૂતારા मतलब scamsters. When there are people who are greedy, scammers will never go hungry in their life. They will make enough money. And that's exactly what is happening. There is no what we call this. And why is he basically a block deal में? वो बता ना कौन से कंपनी का block deal also to be reported to the exchanges ना. He said, I have my broker account. If you want to give me that, block deal में करने को तैयार हूँ. But I'll do with my broker, with my demat account. Tell me. And I'll transfer the money. And why won't the promoters want to do off the market? Why can't you do on the exchange? When my broker will buy from your broker, let the transaction go through the exchange. Ask them the very basic question. Is this transaction going through the exchange? Don't believe in their contract note. I can tell you that contract note भी गलत होगा उनका. और इसको हिस्ट्री दिखाना भाई कौन सा ब्लॉक डील रिपोर्ट हुआ है, तुमने कौन सा ब्लॉक डील में किया है. एंड टेल मी दैट एंड यू चेक द प्राइस. वो 8-10% भी डिस्काउंट पे हुआ है कि नहीं हुआ है. सुनीता जी, आई एम वेरी हैप्पी दैट यू आस्क दिस क्वेश्चन, बिकॉज by asking this question, a lot of other people may also receive this kind of a lucrative offer, which is nothing but the scam. I know investors losing 5 crore and 10 crore in this kind of a scam. And you people must be reading in newspaper also. Why do I need to tell you? It's all coming almost every alternate day. We keep seeing this kind of a scams happening. People are losing tons of money and people still don't realize. See, you are earning, वो करोड़ रुपया कमाने के लिए आपने कितनी मेहनत की आपको पता है. And in no time that crore rupiah will go away. My request, please, 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 do not fall prey to this kind of schemes with folded hands. आपका पैसा है, बचा के रखो. Sam Singh ji, we have model portfolio, we have SOV, stock of the month also. What should be the right strategy to utilize MarketMojo for all these features fully, and how can we align our portfolio accordingly? Please guide. So Sam Singh ji, I am giving my personal opinion. If you ask Mohit, he may have a different opinion. If you ask Jason, he may have a different opinion. If you ask Joyson Thomas, he may have a different opinion. If you ask Amit Golia, our group CEO, he may have a different opinion. So please, there is nothing, what I am saying is 100% right, and what these people say is 100% wrong. Everyone has a different philosophy in investment. If you ask me, portfolio approach is the best portfolio in the life, in the world. So when you take a portfolio approach, what happens in portfolio approach? You are taking into consideration how much exposure you should do in mid, small, large cap. When you take a portfolio exposure, you have a sector allocation. When you take a model portfolio approach, you have a single stock approach and top 3 stock approach. When you do stock of the week and stock of the month, there is some human bias will come in. You may buy more of that, you may buy less of that. They are great products. So if you ask me, I would say 100% out. If I have a 1 crore to invest, I'll say I'll put 80 lakhs in model portfolio, 20 lakhs in stock of the week and stock of the month. That's the way I would do that. Okay, 80-20 kind of rule. And of course, you can play 5% here and there depending upon your risk appetite. But portfolio approach is much superior approach because it pays out very well in a medium to long term. And that's what my advice would be. But again, as I told you, please take it with a pinch of salt because Mohit may have a different opinion, Jason may have a different opinion, Joyson may have a different opinion, Amit may have a different opinion altogether. So you need to basically decide what suits you the best. That's the way. I know some investors, they basically follow only stock of the week and stock of the month. I know some investors who only follow stock of the month. How sometimes, I met someone in one of our offline event and he happened to invest in one private sector bank. Unfortunately, the allocation was so high. Now, one wrong allocation, higher allocation, one particular company, that company does not do well, it takes away great amount of portfolio money. Just to give an example, this gentleman invested in one of the private sector bank. The weightage was 60% and the scrip fell by 40%. Because of single stock, his portfolio is down by 24%, assuming all other companies remain at the same level. So that can happen when you take a stock specific approach. Model portfolio best, 80 model portfolio, 10, 20, then you can bifurcate how much you want to put stock of the week and stock of the month. Do we don't have questions or we are running short of time?
We have questions.
Please take, Amir. अच्छा उस श्याम सुंदर जी का सवाल आया कि नहीं आया? नहीं आया. Hello sir, what's your view on chemical sector? You have been bullish since for last 1 year. Rohan sir, I think as long as the China does not show any revival, it's very difficult, chemical will do well. And I have said time and again, I think because China is one of the biggest consumer of chemicals. If China economy does not do well, do not expect chemicals to do well. Yeah. Bhargavi, is it good idea to buy FSG stocks and hold for as many as we perform future? See, Bhargavi ji, in fact, today I was on CNBC Bazaar and this question was asked by the anchor and I did say, so, but it's a little long term. It's not going to happen because, unfortunately, many of our investors get too much concern if it doesn't perform well in 3 months or 6 months. That's what has happened. So, if you ask me, short term looks a little challenging for FMCG. But if you ask me mid to long term, I think it looks a little excellent. Why? Because a lot of negatives are there in the price. Okay? And hence, it makes a lot of sense. So, I don't know what is your outlook. Is it short term, whether it's medium to long term? Short term, stay away. Medium to long term, yes, you can start dividing into FMCG companies. You can start keep increasing allocation to the FMCG in your portfolio. Riaz, what is an ideal entry and exit strategy for a normal investor? Once we have identified the stock and take a vibe, then entering the ride and exiting the wave is a difficult situation. Even if it is a long-term or short-term investment, we still need a judgment help. So Riaz sir, it's a very simple. See, the reason why MarketsMojo is one of the most popular website or app for the investors, because we help you to entry and we help you to exit. We have a score available on the company. So if the score goes below 60 and the script is falling, please do exit. So we have a powerful tool. Why don't you use Riaz ji, this tool for your benefit? So it's available on the site. Use our MarketsMojo score to decide entry and exit. That will take away your dilemma, sir. Rahul Kumar, what is the current market cap mix in PMS sold portfolio? Okay, so I'll give you mota Rahul Kumar ji. Large cap is less than 50, near about 44, 45 as of yesterday. Medium small cap is near about 55, 56. That's the mix between large and medium small cap. Do that. Someone asked me about model portfolio approach. I said model portfolio is more preferable. There is nothing wrong with this. Keep doing it, but keep doing it in a very disciplined manner. As long as you are disciplined, I think it should pay off very well in the medium to long run. So there is nothing wrong with this. Nirmal ji, what is the view on energy from hydrogen? So the more you read about hydrogen as an alternate fuel, more you get convinced. It's too early to talk about it. Plants are being set up. We need to really use the real case scenario, what's happening there, to take a view. Someone was making me understand that hydrogen by nature, and I'm not a chemical scientist or a chemical engineer, but by nature hydrogen is little more volatile. And hence, how it can be used, we need to wait and watch. But of course, a lot of technologies are working on it. A lot of people have put up plants. But it's too little early, Nirmal ji. If you ask me, I think we are still maybe 6 to 12 months away to form an opinion about. But if this really works well, I think it could be a game changer. Mohan Kumar sir, I learned something from all your webinars. Today is a block deal scam. Thanks. Mohanji, thanks a lot. I think a lot of credit should go to the ma'am because she asked the question and hence I responded to it. So thanks a lot, sir. I'm very happy that at least you came, you learned something from, knew something from this. Last 3 questions, Amir. Meera is asking, Meera, good evening, Sunil sir. Do you think Indian markets will shake once Trump will get in position? See, don't give too much importance to Trump. I must tell you that. You know, why I'm saying so, and I presented data also, what happened to the Indian equity market during Trump tenure in the first term. Okay. So I don't think I will not be too much worried about it. See, try to understand, when you are not in power, you make so many statements. When you are in power, you need to also understand the ground reality. How much is possible, how much is not possible, and so on and so forth. If you do everything what he has said, I think US economy will have a lot of problems. So I don't think we need to be too much right now. So taking investment decision, I don't think Trump should be the factor to consider it all. That's what my advice would be. It can have an impact maybe for 1 month, 2 months, 3 months. Not beyond that. How will the market till next budget? My sense is that, market will start speculating about what can come in the budget, what cannot come in the budget. DTC is definitely ruled out. That's what the finance minister has given an indication, because the code itself will take 5 to 6 months and budget is less than 2 months away. So the market will remain a little choppy. That's what my sense is. Okay, with no clear-cut direction. That's what my sense. Any good news for real estate sector boost in India? I don't know. Somehow I get an impression that the real estate is little. Of course, this is all micro market. So somewhere I was reading some reports from some of this people, those who are into real estate, consultant in real estate. They are saying the kind of price appreciation that has happened in the last couple of years, it's unlikely that that kind of price appreciation will happen going forward. That's what they are saying. So I don't know whether we should expect too much rally in the real estate companies. Sandeep Das say, hello sir, what are your returns on longest period of Mojo PMS since inception and how long is that? So Sandeep sir, we started our PMS only in July 2023. First customer we onboarded, to be very precise, 30th June 2023. Now SEBI barred us from giving the first portfolio returns. So I think, but we are almost 1.5 years old in our PMS. The return longest, I'm afraid I will not be able to give you on a public forum. If you are much interested, please reach out to our RM and they will help you what kind of returns we generated, because it's SEBI says you have to compute TWR returns and showcase that returns. I just to give it some idea, in the month of September we outperformed the benchmark. In the month of October, when the market was really very, very volatile, down 6.5%, we outperformed. In the month of November we outperformed, and as of today, that is month to date, we are outperforming in the month of December also. But we can share you more data once we connect offline. मुझे ये भिजवा दीजिए please. Piyush sir, what is your view on renewable energy and AI? Also give a view on defense sector. So my view on the renewable energy has been extremely good. Only thing, the demand for renewable energy is going to be very, very high. Will all companies make money from that space? Looks little difficult. AI again is a very good good future. Remember, what we are seeing AI today is not the AI that we are going to see in next 5 years down the line. It's like a mobile phone. The first mobile phone when it came out was bulky, and it was as a keypad and so difficult, and it was not a smartphone. Am I right? It was an analog phone. So what happened to the mobile phone? Something similar is going to happen with the AI. In next 5 years down the line, the AI that we are going to see is nothing what we are seeing today. So it's a great transformation is going to happen because of AI. The way we talk, the way we consume data, the way we analyze companies and so on and so forth. Bright future for the IT sector. And view on the defense, again remain be company specific. I don't think the overall we should be too much bullish on the demand for that sector is extremely good, but some of the defense companies are commanding a rich value, such a lot of good things are already there in the price. That's what my sense is. Last question. Uday sir is saying Mojo tells 91% buy on a stock. Once we buy it falls, and now Mojo says 82% buy. When to buy the stock? When it's 82 or 91? So it's buy is buy. You can buy it 91 also, you can buy it 82 also. What is the problem? It's a buy. As long as the score is buy, anything above 70 and above, it's a buy. Please go ahead and buy. Okay. The only difference between something which is what we call above 85 is a strong buy, and the buy. So if you ask me, there is no difference. Please go ahead whether it's a 91 or 82. If you like the company, go ahead and buy the company. I know there will be more questions there. Am I right? There questions are more there. Am I right? But I think in the interest of the time, we need to respect the time also. Thanks a lot to everyone taking time out and attending this webinar. Again, I'll come in front of you next week. We'll try to cover more questions at that point of time. Good night. Take care. For PMS customer, I am there in front of you with some interesting data analysis.